Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
All right, that's high-low vol. The range vol is just done on kind of calculating the average daily range. So it'd be 10 days plus, 12 days plus whatever. All right. Now this is a chart from Live Vol Pro, so this chart is actually close. All right. So if volatility is mean reverting, where I get the 10? Well, I used 10 day. It was 10-day historical, 10 trading days. Okay, so that was a calculation of 10 days. If you do 20, you would do 20 over 365, or 252, sorry. Got it? All right. Now, if volatility is mean reverting, when HV is elevated or deflated, the rate of movement is likely to slow down or increase. Okay? Notice how FCG, this is an ICE ETF, bounces off highs and bottoms. All right? Those can actually be a really good time to think about buying premium on the lows, all right, and buying premium on the highs. All right? Now, the underlying, you can actually see this is how HV moves. The underlying is consistently slowing down and speeding up. It's like a moon orbiting a planet. All right, that's the way HV moves. It really it orbits around that HV. Now the orbit may get really out of whack for periods of time, but it will revert back. I mean, it absolutely will. Okay. All right, now one way I like to use HV 10 and 30 is to get an idea of how vol is moving. So if my 10-day is low, if my 10-day is lower than my 30-day, what's going on with the stock's realized volatility? What do you guys think? If 10-day is lower than 30-day, what's going on with realized volatility? Yeah, it's falling. That's exactly right. It's falling. And that's actually a really good thing to know. All right, yeah, that's becoming less volatile. This is actually one of my favorite types of thing to look at. I know that, when this is getting really well above the 30-day, that, it's probably going to slow down. And when it gets too low, it's going to speed up. 30-day HV is much smoother than 10-day. 10-day is a lot noisier, but 10-day is really, really good. It's really good. IVHV, all right? In theory, an IV that is higher than HV is a winning trade, but not always, all right? IV, thing you got to remember is IV tends to be forward-looking, and HV is looking in the rear-view mirror. That said, a higher IV than HV is a good thing for those looking to sell premium. Vice versa for those that want to own. When I'm buying an IV that is way below how a stock is moving, that is usually a winning trade. When I'm selling it way higher than a stock is moving, that's usually a winning trade. The only time you'll see stuff like that where it doesn't work is on earnings. Okay? HVIV. All right, this is actually, when would you want to buy and sell premium here? If you're looking at this is FCG. What do you think? All right, well, let's walk through. All right, I'm looking, and this is, believe it or not, do you want to own or do you want to sell? What do you think? Well, what you really want to do is sell here. Or you want to own here, I'm sorry. and you want to sell here. That's what it comes down to. All right? The key is catching it, all right? But no, in theory, this is you definitely want to own back in this area. All right? Meanwhile, this would be an area where you might really think about, what do you think? That's a decent premium sale. You've got an IV that is somewhat elevated to HV. All right? The two of them are going to come together. Now, this isn't that simple, though. All right? I want to point you towards something. All right? Is IV too high or HV too low? Okay? That is a big thing to remember. All right? If you look at 30-day, 30-day really tracks that IV, right? But 10-day doesn't. So here you might actually say something like, you know what? HV's too low, IV's not too low. Here you might say HV's too high, IV is too low. Here you might say IV's too high. You know, right here, IV is definitely too high. Does anyone understand the difference? There's a big difference between low HV and a high IV. All right? If you've got low IV and low HV, then HV is too low. If you've got high IV and low IV may be too high. Or there may be an event coming. That's your other option. Okay? Somebody said marker is hard to see due to its color. Here. So what I'm saying is, there you go, right there, right there. So here I would look and I would say, you know, IV might be a little high, and HV is definitely too low. Here I'd look and say IV is way too high. Now here, I would say HV is too low. You see how we're kind of thinking about that? And those can kind of give you hints into when to sell premium, when to buy premium, or when to stay away. You know, that's actually almost as good as the stay away stuff. You know, you may look at something like this and say, no way, I want to sell. All right, putting to use. If IV or HV is too high, sell premium. All right, directionally or non-directionally. All right, directionally selling puts, calls, or spreads makes a lot of sense. Buying premium is typically a bad idea. All right, non-directionally selling condors, strangles, and even butterflies. All right. If HV or IV is too low, buying premium, directionally or non-directionally, makes sense. All right? Directionally, buy puts, calls, spreads. Selling premium is a bad idea, and non-directionally, buying straddles and strangles can make sense. Okay? So what would you do? All right, this is yuck. All right? When you look at this spread, what do you think? We're right here. What would you do? Well, I would say both HVs are low relative to IV. Now, is IV coming from a place of being high, or is IV coming from a place of being low? Well, IV is coming from a place of being high, and HV is actually, if you look, is actually about normal. I would be looking to sell. Yeah, I'd be looking to sell premium here. I would absolutely be looking to sell premium. All right. So there are many definitions of volatility. Understanding what all the different types can mean can help a trader. All right. Traders that use vol comparisons to help their decision-making process, you're going to be a happy camper you did that. And trading is difficult. This is another weapon that traders can add to the arsenal. All right? So anytime I do these, I expect to get a lot of questions, so I like to give myself plenty of time. It's a nice, rich topic, and I went over some of it, but I think that this is such a deep topic. It's important to just pull it off in small pieces. Okay? Hey, somebody said outstanding. Thank you. Do we have any questions? Does implied volatility and forward volatility only apply to extrinsic portion of strike premium? Well, that's where that's calculated from. That's the insurance value, right? The extrinsic portion is the time premium. That's the insurance. Okay? That's where it gets calculated from. All right? What program did you use? I used LiveVol Pro. LiveVol Pro. It is, hands down, the best volatility modeling software available to the retail public. All right? So, do I recommend a book? In terms of vol, I like to look at, I've got my book list. I've written up on my blog. So if you go to my blog and look up book list, you can definitely find it. All right? It's optionpit.com/blog. All right? Any other questions? Vol is an output of a model formula. When bid-ask widens on the weekend, does it cause, how do you pick how far back to see if rising or falling? That's a good question. Anything outside of 30 days is going to be kind of a waste, I think. All right? Now, it's important to know what level, what the mean vol is. All right? But anything outside of 30 days is going to be noise, except for you need to know one thing, okay? What has happened over, is vol low for the last 30 days, is vol low for the last year, and is vol low for the last 5 years. I do like to find 52-week low vol. Anytime I find a 52-week low vol, I find that's typically a buy. So yeah, as the bid-ask widens this weekend, weekend will affect realized vol. It'll affect. It won't affect historical, but it will affect implied. Yeah, I don't really do the expiration cycle stuff. That's not as important to me. Okay? How did you trade an event earnings with elevated IV and average? Victor, that's a great question, but that is a very long question. What program do you use trades? LiveVol Pro. So, how do I trade in front of earnings? Earnings are a tricky thing. I could talk about that by itself for 5 hours. There's a lot of things beyond vol that I look at, though. I'll tell you that much. All right, guys. I wanted to let you know. Oh yeah, thank you very much. There's my book list in the. Do you study vol skew? Do I study vol skew? Yes, I look at. I am. Let's put it this way. I am. That is all I really look at is the difference of how volatility moves. All right. What model do you use to calculate the implied volatility of VIX options? Oh, wow. So the problem with VIX options is that they're based on a future. What I found is that a lot of the major programs don't calculate to the future. They calculate to the VIX cash, which is borderline negligent. Okay? So you've got to be very careful on that. I'm going to be doing a presentation. I'm going to be doing a free webinar a week from tomorrow on OptionPit's website. Go to optionpit.com/events, and I'm going to be talking about adjusting butterflies. So you should totally check that out if you like what I talked about today. Yeah, here's my reading list. Thank you, Ray. I'm going to pop my reading list out there to all attendees. All right, guys. If there's no more questions, I have a 5.5-hour drive to Detroit right now. So I'm heading up to the Motor City, drop off my kid and my wife and my dog. Then I'm flying to New York for this Street.com event. Okay? So if you liked what you talked about, this is just the tip of the iceberg of ball. You have a lot of stuff to do. I get intricately into these discussions on my blog. And I'm going to be talking about it in detail in relation to adjusting butterflies on Friday, or a week from Wednesday, excuse me. All right? I hope everybody has a great day. And I will talk to you guys soon if we don't have any more questions. I assume I'll be back next month, in a month or two. Have a good one.
All right. Thanks to Mark for sharing your insights today. Thanks to everyone for joining us as well. Make sure to visit ISE.com/ETF if you want to learn more about ISE's ETF product. You'll find product info, articles, and a link to sign up for some free trade alerts. They'll help you learn how to best trade those ETFs. So they're great for investors who are new to the product, and they're a valuable free tool that we're offering to our webinar attendees. If you have any questions or comments, please do make sure to send us an email. The address is webinars@ise.com. Thanks to everyone again, and we hope to see you back next time. Take care. Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.